Good morning, guys. Welcome to the Camp Financial Stock Market Update. So, yeah, the markets have been pretty difficult, I guess. I'm not sure difficult's the right word, but you know, it's something. Yeah, it's definitely been a challenging time here recently. It didn't really start till later in October, up until now, and so what the word on the street is that's because of there's greater and greater concern that Trump is going to win the election. Um, I'm not going to go into the politics on it here, but they had priced in a Hillary Clinton win, and now there's fear that Trump's going to win in the on Wall Street. So that's kind of what we're seeing. Couple stocks to note yesterday. Facebook down 5.6%. It looks like a lot of again, back to what I had said, probably a week ago or so, the high flying tech, high growth companies are feeling a lot of pain. I mean, Facebook down 5.5%. That's a big move. We're also, Fitbit was down 30 some percent yesterday. AIG is down 4%. So the market is definitely in a rough spot. Healthcare, pretty much across the board, healthcare was red yesterday. I see one. It's funny because I see a lot of bright green in here. Then there's one, or a lot of bright red in there. Pfizer down 2.5, Amgen down 2.5, Allergan down 4.5, Mylanta down 7, or Mylan down 7%. I'm not even sure. Mallinckrodt down 7.23%. Express Scripts down 3.7%. CVS down 2.8%. And then right next to those, you've got Becton Dickinson up 3.78%. Again, it's kind of give us an indication that right now in the markets, your earnings are very important for your stock. I mean, a lot of these stocks, they trade together when one, whoever the first is to come out and report, most of the time the rest of the companies within that same industry will trade the same way. But then if you have good earnings within there, your stock pops right back while everybody else's falters. So 21st Century Fox was up 7.28% yesterday. All this stuff basically on the back of these companies having pretty good earnings. So it's kind of the view of we also so life insurance, MetLife up 2.5%, Prudential up 3.5%. I'm trying to figure out which. There it is. Lincoln National up 6% yesterday. So life insurers performed pretty well yesterday as well. So that kind of gives us a breakdown. So the market as a whole, the Dow was down 0.16, NASDAQ down 0.92, primarily due to the Facebook drop. I know Apple has been selling off pretty good as well. And then the S&P 500 was down 0.44%. So I wouldn't consider this bear market yet, but we're talking the market is down almost 5% from its highs, so, or it may even be 5% from its highs right now. So we're definitely in the throes of a very tough um, earnings season and a very tough, well, just stock season altogether. So I started to roll over all of my um, trades from Excel into Google Finance so that I can keep track of them simpler. If you don't use Google Finance, or if you're not sure, um, I mean, you can do the same stuff in Excel, but it's you're gonna have to actually write some code to have the system go out and look at it. On Google Finance, if you're trying to track a trade or something like that, all you gotta do is, if you put in the amount of shares that you own, you put the ticker symbol in one column. You can put the amount of shares that you own either within the column or whatever. But what I've done is, in column 1, I've got my ticker symbol. Column 2, I've got the day that I bought the stock, and then I show all of the trade history, for each of my systems all the way through, and I show the month end historically. So if you go all the way back, you can see at the end of each month where the system was at, how it had performed. And actually what I did is, so now that I'm converting this all over, what I always do is, in the current month, I just want to keep whatever current price is. So all you have to do is, you could take your number of shares and multiply it by the formula, which I guess it's what it is. It's Google Finance, and then have it look up the stock symbol, and it'll pull the price in for you. So, so that's if you're into the tech side and you're interested in tracking your portfolio like that, it's a good way to just kind of keep an eye on it, see what's going on. Again, I really like it because it makes it easier for me to go on and track. I don't have to update the prices manually anymore. It'll pull it all in, and then at the end of the month, so all I got to do is remember to go at the end of the month. I'll go in, I'll pull the new column forward, go back and close out the month prior with whatever the closing price was for that night. So that's it for today, guys. I will say, so I talked on my Facebook page, on Facebook Live, about this, or about a trade. Here's another trade that I missed because I didn't trust the system, and I took the number 2 trade instead of the number 1 trade on the system. And so in this undervalued portfolio, I buy $2,000 worth of the stock at a time in a lump sum. Back in April, I was looking at the resorts section, and it was between Las Vegas Sands and Marriott Vacations Worldwide. And Las Vegas Sands was the number 1, and Vacations Worldwide showed up as the number 2 selection. I didn't buy Las Vegas Sands. Obviously, I bought VAC. So since that time, since I made that trade, VAC is down 7.6%, and that includes my dividends in there. So the actual stock price is down a little more than that, but it's down 7.62%. Las Vegas Sands, if same thing, if I had taken the dividends and put it in there, it's up 24.44%. I've learned within the last 6 months on enough trades now to know to trust the system and follow it. There's a reason why I tested it and it works. So I should always trust when it tells me to buy a certain stock. I didn't really like Las Vegas Sands at the time. I wasn't a big fan of buying the casino stock, and I screwed up because that's the difference of $600 in my portfolio. So, all right, guys, take care, and we will see you next time.